Ever wondered how the rich keep getting richer? Want to know the secret? They invest, and so can you. Welcome, financial adventurers, to the world of investing, where fortunes are made and dreams are realized. It's like a vast ocean filled with opportunities but also riddled with risks. You see, the secret to growing wealth isn't just about making money, it's about making your money work for you. And that's where investing comes in. Imagine a seed. Alone. It might not seem like much, but plant that seed, give it water and sunlight, and over time, it grows into a mighty tree. That's the power of investing. Every dollar you invest is like a seed, capable of growing into a towering oak of wealth. Now, you might be thinking, but investing sounds complicated? Well, it can be, but it can also be as simple as understanding the magic of compound interest. Compound interest is like a snowball rolling down a hill. It starts small, but as it rolls, it gathers more snow, growing bigger and bigger. That's your money, growing over time. In this video, we're going to guide you through the process of investing in the stock market step by step. We'll talk about the importance of starting early and setting clear financial goals. We'll discuss assessing your financial situation and determining how much you can afford to invest. We'll delve into understanding your risk tolerance and choosing stocks that align with it. And we'll explore different investing styles and the types of investment accounts that might be best for you. Remember, the journey of 1,000 miles begins with a single step, and that first step is understanding the importance of investing. It's about grabbing the bull by the horns and taking control of your financial future. Ready to start your journey to financial freedom? Buckle up and let's dive in. Before you dive into the world of investing, take a good, hard look at your finances. Can you afford to invest? Let's find out. The road to financial freedom begins with understanding your current financial situation. It all comes down to what's left in your pocket after you've paid your bills, bought groceries, and maybe treated yourself to that extra cup of coffee. That's your disposable income. Now here's the million-dollar question. How much of this should you set aside for investing? Well, there's no one-size-fits-all answer. It's all about striking a balance. You don't want to be the person who lives off instant noodles just to squeeze out an extra buck for investing, right? At the same time, you don't want to miss out on the magic of compounding because you didn't invest enough. As a rule of thumb, consider setting aside at least 10 to 15% of your income for investments. But remember, this isn't a hard and fast rule. Adjust it to suit your lifestyle and financial goals. Remember, only invest what you can afford to lose. Now, on to the next step. Are you a daredevil or a cautious cat? Knowing your risk tolerance is crucial in investing. Picture risk tolerance as your personal comfort zone in the financial world. A gauge of how much financial uncertainty you can stomach. It's like the volume knob on your music player. Some like it loud, some prefer a softer tune. In investing, this translates to how much loss you can endure before you start to panic. Now, investors can generally be classified into three main categories based on their risk tolerance. First, we have the conservative investors. They are the cautious cats who prioritize preserving their capital over high returns. They tend to gravitate towards safer investments like bonds or blue-chip stocks. Then, we have the moderate investors. They're not afraid to dip their toes into riskier waters, but they're not quite ready to dive in head first. They strike a balance with a mix of safe and riskier investments. Finally, we have the aggressive investors, the daredevils who are ready to ride the roller coaster of high-risk, high-reward investments. They're comfortable with the potential of significant losses for the chance at substantial gains. Remember, there's no right or wrong risk tolerance. It's all about understanding your own financial goals, your ability to absorb losses, and your overall comfort with uncertainty. Understanding your risk tolerance helps you make smarter investment decisions. But where should you invest? Let's find out. There are as many ways to invest as there are stars in the sky, but don't worry, we'll help you find your North Star. Just as we all have unique tastes in music, food, and fashion, our investment styles can also vary greatly. Your investment style should be a reflection of you, your goals, your risk tolerance, and of course, your financial situation. Let's dive into some of the most common investment styles and how they align with different risk profiles. First up, we have value investing. This is the strategy of the patient, the calculative, and the tenacious. Value investors hunt for stocks that are undervalued by the market. They're like the thrift shoppers of the stock market, looking for quality items at a discounted price. Next, we have growth investing. This is for those who don't mind taking a bit more risk for the chance of a higher return. Growth investors are like the surfers of the stock market, riding the waves of high-growth companies, even if it means dealing with a bit more volatility. Then there's income investing. This style is for those who prefer stability over high returns. Income investors are the marathon runners of the stock market. They seek out stocks with regular dividend payouts, providing them with a steady income over time. Finally, we have the social or ethical investors. These folks are the activists of the stock market, choosing to invest in companies that align with their personal values and societal goals. Remember, no one style is better than the other. It all comes down to what aligns with your personal goals and risk tolerance. Some may prefer the slow and steady approach of income investing, while others may be drawn to the thrill of growth investing. It's like choosing between a cozy sweater and a flashy t-shirt. Each has its own appeal and purpose. Finding your investment style is like finding your fashion style. It should suit you perfectly. Now let's talk about where you can start investing. Choosing a brokerage is like choosing a partner. You want someone reliable, trustworthy, and affordable. Just as you wouldn't jump into a relationship without knowing a person's character, you shouldn't select a brokerage without understanding its ins and outs. The brokerage you choose should harmonize with your investment style and financial goals. Are you a long-term investor, a day trader, or something in between? Different brokerages cater to different styles, so it's essential to find one that fits your needs. Fees and charges are another critical factor to consider. Traditional fees might include trading commissions, maintenance fees, and service fees. These can eat into your profits, especially if you're investing smaller amounts. It's like having a partner who's always dipping into your wallet. Not cool, right? A trading commission is a fee you pay every time you buy or sell a stock. Some brokerages charge a flat rate, while others may charge based on the number of shares. Maintenance fees, also known as inactivity fees, are charged if your account balance falls below a certain threshold, or if you don't make a certain number of trades within a specified period. Service fees cover the cost of various services provided by the brokerage, such as wire transfers or paper statements. Now you might be thinking this sounds expensive, and yes, it can be. But here's the good news. Some brokerages offer subscription-based models, much like your favorite streaming service. For a set monthly or annual fee, you can make unlimited trades. This can be a more affordable option, particularly for active traders. So it's like having a partner who's always there for you, without any hidden costs. Remember, choosing a brokerage isn't a one-size-fits-all situation. It's about finding the one that suits your style, fits your budget, and helps you reach your financial goals. Choosing the right brokerage can make or break your investment journey. Choose wisely. You've got your finances in order, you know your risk tolerance, you've chosen your investment style, and you've picked your brokerage. You're ready to invest. Let's take a moment to reflect on the journey we've been on together. We started off by facing the bull, getting our finances in order and setting clear financial goals. We confronted the numbers, looked at where we stand and decided how much we can afford to invest. Then we dived into the world of risk and reward. We understood that investing isn't a one-size-fits-all game. It's about finding what works for you, what level of risk you're comfortable with, and which stocks align with that. Next, we explored the different investing styles. We learned that whether you're a day trader, a swing trader, or a long-term investor, there's a style that matches your personality and financial goals. We then navigated the landscape of brokerages. We discovered the importance of considering not just trading commissions, but also maintenance fees, service fees, and the potential tax advantages. We learned that choosing the right brokerage can make or break your investing journey. And now, here we are, ready to begin. Investing isn't just about making money. It's about gaining financial independence, securing your future, and maybe even leaving a legacy. The potential benefits are immense, and they're within your reach. Don't let fear or uncertainty hold you back. Take that first step. Start investing. Yes, there will be ups and downs. Yes, there might be times when you second-guess your decisions. But remember, every seasoned investor was once a beginner, and every successful journey begins with a single step. Remember, the journey of 1,000 miles begins with a single step. Take that step today, and for more details, make sure to watch our recommended videos. Happy investing!